Matt the Mortgage Guy here. Wanted to shoot a quick video on whether or not you should wait until your credit improves before you buy a house. And the reason I'm making this video is I have this conversation quite often. Folks think that it may or may not be a good idea to work on their credit before they buy a house. And what I'm gonna say before I explain anything and my thought process on my position on this whole thing is that it all depends. In some cases, it makes all the sense in the world. Hey, I wanna save a little bit more money and I wanna increase my credit, then I'll be ready to buy. But in a lot of cases, what I find is that people use this as an excuse to not move forward on a home purchase when the reality is the difference in mortgage rate for the specific loan that they're targeting between 640 and 680 is minute. And the problem is you spend 2 or 3 months increasing your credit score, rates change on the daily basis. So what you get 3 months from now with a 680 score might be worse than what you get today at a 640 score. So all I want to say is that if you're thinking about buying a house, what you need to do is talk to a professional who can lead you in the right direction and maybe show you. Any good mortgage professional like myself is happy to sit down and say, here's what a mortgage looks like projected, 680, 700 credit score. Here's what it looks like today. You've got a 648 mid score, you've got 3.5% down, and here's what the monthly payment's gonna look like, your cash to close, all that, so you can make an informed decision. But what I don't want people to do is use this idea that they've got to have perfect credit before they buy a house to stop them from owning. Because what I'll tell you is I ran some scenarios and I just looked at the difference between a 640 and a 680 credit score for an FHA loan, which is very common for folks with those credit scores who are first-time buyers and putting 3.5% down. The rate difference is less than 1/8. So I can't quote rates because I don't want to get in trouble. 1/8 of rate difference is not a big difference. So you don't spend 3 months to get from 642 to 687 so you can have 1/8 better. Because like I said, in the future, rates may have changed. You may be worse at 687 than you were at 642. So, maybe you've got a 585 credit score and you want to get to 620 or 640. And there's an incremental change there. Again, it's not a huge change. I can run scenarios at 607 and tell you that it's not more than a 0.5 point different between 607 and 642. But everyone's scenario is different, so it really depends on where you're at on a number of different areas, with your job, with your down payment, with your credit score. But do not let the fact that your credit score is not perfect stop you from buying a house. You should at least still have the conversation, because more often than not, with talking to folks, they're able to get a lot better loan than they suspected with, not perfect credit. If you have any questions at all, please feel free to reach out. Until next time, Matt the Mortgage Guy.